Some people believe the Fed will intervene if the stock market plummets, the so-called Fed put. Are they correct?
I'm going to say no with an explanation.
Tariffs are still shaking up the market, and there is a ton of uncertainty, and China's not making it any easier for us, and it seems like a trade war is inevitable at this time. We also have Bitcoin that continues to outperform the market, and we have the Feds pretty much saying that, hey, we're not coming to the rescue this time. I don't care how low the stock market goes. You know, this theory of a Fed put is false. And again, the Feds are not going to step in to bail out the stock market this time. So I'm going to make this video fairly short. All I ask for you to do is subscribe to the channel to see more content like this and like this video. But let's hop right into it. When it comes to China and the tariffs, the U.S. pretty much came out and said, hey, look, you have to pick sides. You're either with us, the U.S., or you're with China. And then China comes back and says, hey, if you choose the U.S., then we're going to retaliate against you. So long story short, the tariffs are still, you know, creating a trade war, and it's creating a lot of doubt and uncertainty, and that's why you're seeing the stock market drop so heavily today. I think the QQQs were down over 3%. I think the SPY was also down over 3%. So volatility is still super high because these are not normal moves in the stock market. I mean, a 3 or 4% move in the overall market, that's pretty substantial. Now, on the other side of things, if you're a Bitcoin investor or you're holding Bitcoin, it's actually been performing and holding up pretty well. I mean, you know, when we're seeing the stock market down, you know, 3-4%, you're seeing Bitcoin up 2 or 3%. This is at the time of this recording. This obviously could change. It's very volatile as well, but nonetheless, Bitcoin has been holding very well. And so one thing moving Bitcoin is that Strategy, or formerly known as MicroStrategy, bought another $555 million worth of Bitcoin. So obviously that's driving some, buying pressure to Bitcoin. But nonetheless, like I said, I mean, this has been a pretty good performing asset throughout all of this. And I feel like there's good reason for this as well, because I mean, at the end of the day, Bitcoin's not affected by the tariffs, right? And then you have the US dollar falling off a cliff. I mean, it's down substantially, and all this fear behind, you know, the dollar losing its value and this and that, it's just going to drive even more people towards purchasing Bitcoin as an alternative. And then Tom Lee puts out an article why he thinks that Bitcoin is possibly going to bounce soon. But nonetheless, it's looking pretty well. We're at a key level of resistance right now, though. If we break above that, you could see a breakout with Bitcoin. So I would be watching that if you're looking to, trade Bitcoin. But moving on, there's also a clip that came out with Jerome Powell pretty much stating that, hey, the Feds are not going to come and bail out the stock market this time. So, there's a lot of talk about a Fed put, pretty much meaning that the Feds are going to step in and they're either going to lower interest rates or print money or whatever it might be to stimulate the economy, and that obviously will drive up the stock market. And so I'm going to show you this quick clip of Jerome Powell pretty much saying, hey, that's not the case.
Some people believe the Fed will intervene if the stock market plummets, the so-called Fed put. Are they correct?
I'm going to say no with an explanation. So what I think is going on in markets is markets are processing what's going on. And, it's really the policies, particularly the trade policy. And really the question is, where's that going to come in? Where's that going to land? And we don't know that yet. And until we know that, you can't really make informed assessments that would still be highly uncertain. Once you know what the policies are, it'll still be highly uncertain what the economic effects will be. So markets are struggling with a lot of uncertainty, and that means volatility. But having said that, markets are functioning, conditional on being in such a challenging situation. Markets are doing what they're supposed to do. They're orderly, and they're functioning just about as you would expect them to function.
So I thought that was pretty interesting. I mean, he clearly said, hey, look, that's false. We're not stepping in. And you have Trump, on the other hand, getting pretty pissed off at Jerome Powell, saying, hey, I'm going to fire you. I'm going to find someone else that will come in and cut these rates if you can't do the job and whatnot. So, we know from the past that they don't really have a good relationship. But For those that were wondering if the feds are going to come and step in, I think we have the next Fed meeting May 7th, and I think the chances of them doing a rate cut then are slim to none. So I mean, the market probably already has that priced in, but again, Trump really wants the feds to step in to save the stock market from all these tariffs and uncertainty, and that's just not going to happen. So we'll have to see how the tariffs shake out. It's still not looking pretty, but my thesis has not changed. Although I do think we could possibly see lower lows, I don't think, the selling pressure is necessarily over yet. I still think this is a good buying opportunity and a time to just keep accumulating shares. I still think, nonetheless, I still think this is a great time to dollar cost average into companies that you love. Some on my radar right now are like Meta, Google, and possibly even Nvidia, just because their earnings, growth has been so substantial, and where it's trading at now is a pretty enticing valuation. But nonetheless, those are some companies that are very undervalued. Again, don't go all in when you're looking to purchase right now, because we could see lower lows. So again, just dollar cost average. Let's say you have $5,000 to allocate towards some stocks, buy $500 a week, right? And then just keep buying that way. So if the market falls more, you have more capital to keep averaging down, and vice versa. I mean, if it's trading up or sideways, don't let that stop you from, investing. Just have a plan, that you're going to allocate so much money per week based off of your situation, and keep dollar cost averaging. I really don't think you can go wrong with that. But that's all I have for you in this one. I wanted to make it fairly short, just a quick update of what's going on in the market. Please consider subscribing to the channel, and I'll see you in the next one.